As the market price of ADA has, along with many other cryptos, had an incredible period of gain over the last year, I've decided to sell and lock in the gain for around 20% of my ADA holding at the current market value of around $1.40 per unit. And I want to make it clear that locking in part of your holding may not be right for every investor. And the purpose of this video is to share the reasoning behind why I decided to sell 20% of my holding, and why it may or may not be the best strategy for every investor out there. The people who were watching this channel about a year and a half ago will know that I bought $10,000 worth of ADA through an investment partnership when the price was around 3 cents per unit, and that particular ADA holding I've held on to entirely until now. And in fact I'll continue to hold 80% of that holding as I'm only selling 20%, but those of you who have done the calculation will know that the value of that holding is now approximately $470,000. And so by locking in 20% of that holding, which I have to pay capital gains tax on I believe, I will have raised a deposit to fund a property deal that I'm looking at here in the UK. And had this deal not been available, I probably wouldn't have sold any of my ADA, but I have an opportunity to purchase a property which has a lot of potential to add value to, and which is also a very rare opportunity. And so I feel that I'm only sacrificing 20% of my ADA holding, which isn't very much at all. And I know that there will be people out there who say that I'm lying, but all I can do is say, look, I was talking about Cardano and ADA on this channel since the price was a couple of cents per unit, and I've talked about this particular holding many times before, especially when the price was a lot lower than it is right now. And anyway, the point of this video is to illustrate that although none of us like to sell our crypto, and although it is always a tough thing to do, we have to think rationally and we have to be realists and avoid thinking emotionally. I know of people who are sitting on $500,000 worth of ADA and other cryptos, maybe a bit less, and who can barely meet their rent payments, and they won't sell a single unit because they are so emotionally invested. And that isn't necessarily a bad thing, so long as we can keep those feelings separate from our ability to make rational decisions. And for me personally, the reason that I got into crypto, and one of those cryptos being ADA, was for financial freedom. It's the same reason that almost anybody invests into anything. They want to better their financial position and they want to achieve financial freedom eventually. And since the pandemic, I think that we all have a renewed understanding of just how important building financial freedom is. And hey, I will do my best to hold on to as much of my ADA as is practical for me to do so, but I won't compromise the financial freedom that I've already achieved in crypto this bull run, no matter how big the potential gains could be in the future. And again, I got into crypto because I didn't want to have to work for somebody else for the rest of my life. I wanted to invest my surplus income into a space which I perceived as having good potential for returns, and of course at the time it was a bit of a gamble because nobody knew for sure what was going to happen. But I've already made my money in crypto and in ADA, and luckily I only need to sell around 20% of my holding in order to finance this deal. And in conjunction with the other couple of properties which I already jointly own, I should have enough passive income to not have to work full time anymore. And for me that was the ultimate goal. A lot of investors come into crypto and they don't know what they want to get out of the space, which I think is a huge mistake, because if you don't know what it is that you actually want, you don't know how likely it is that you could get it or how much risk is involved in the journey. And more to the point, there's no way of recognizing it if and when it does come around. And so I always recommend that at the very least, every new investor coming into the space should know what it is that they want to achieve, and that they should also understand the risk involved with trying to achieve that end. The truth is, when I came into crypto, I was very lucky, not smart but just lucky, because I entered the market at a time where the prices were very low relative to right now, and there was far less attention in crypto at that time than today. And the point at which I began to get serious about Cardano and started to do a lot more research into ADA, through sheer coincidence coincided with the cyclical low of the last bear market. I didn't know that the price wouldn't fall much lower, and I definitely didn't know that the price would reach $1 again so soon, within about a year and then some. And so I was very lucky, and I'm not sure how well I'd do if I was starting over again, simply because there is a lot more competition in crypto and prices are much higher than they were then. And this makes a like-for-like gain much more difficult. I mean, it's way easier for a crypto to do 40 to 1 from 5 cents than 40 to 1 from $2. So remember that taking profit always depends upon individual circumstances and individual goals. I got into crypto to try and achieve financial freedom, and I've been lucky enough to be able to achieve that. But maybe other people's goals are different to my own, and that's fine. But a lot of people have no goals at all. And if you take one thing away from this video, it should be that every investor needs to have a goal and a way of measuring success, and simply knowing what it is that you want and having a plan to achieve that end massively reduces your chances of making poor capital allocation decisions, and therefore boosts your chances of success by a considerable factor. Thanks for watching, and if you enjoyed this video and you'd like to see more content like this in the future, be sure to subscribe to our channel. See you in the next video.